It was a comeback quarter for Mindtree with clear indications that the company has completely come out of the uncertain days following the takeover battle and has also embarked on a smooth sailing under the new leadership. But a sudden storm in the form of a disruption led by COVID-19 has clouded the short-term outlook for the company. In our Ideas for Profit today, I will discuss whether Mindtree will stand out in the mid-cap IT universe in the long term from here on. Now, the quarterly performance for Mindtree was strong and was not impacted by COVID-19-led lockdown, as the company seamlessly moved almost 99% of its employees to work from home, thereby ensuring no supply disruption of any sort. Now, the revenue for the quarter at $278.4 million grew by quarter-on-quarter 1.2% in the reported currency. The full-year revenue of $1.08 billion showed a growth of 8.7% in reported currency and 9.7% in constant currency. Now, in terms of geographies, US with a share of 77% in revenue grew strongly, whereas other geographies were weak. Now, the key client in technology, high-tech, based out of US, grew strongly. That was reflected in the strong performance as well of the technology, media and services vertical. Now, the key client showed a sequential growth of 8.3%, whereas the remaining business de-grew 1.1%. Now, in terms of margins, there was a sequential improvement of 150 basis points to 17.1% this time. Now, the highlight of the quarter was a record deal win of $393 million, taking the total for the year at $1.2 billion. Now, this shows the return of confidence in the new leadership of Mindtree. Now, the company has an industry-leading digital proposition with a share of digital at 38.5%. However, COVID-19 may also impact in the short term, and the management actually expects a weak Q1 FY21 both on the revenue and also on the margins front. There is also a possibility of delayed ramp-up of deals in the near term. Discretionary spend may also get delayed in BFSI, that is banking, financial services and insurance sector. And it could also get severely impacted in the travel and hospitality sector, which is close to 16% of the total revenue. Now, part of the pain could also get offset by the higher traction from the technology and CPG sectors. Albeit the challenge is, the company is not opting for workforce rationalization and has also decided to honor the campus offers, relying more on the operational improvement and lower capex as the levers. Now, while pricing pressure from highly impacted verticals is definitely possible, the management did not sound excessively worried on that front. Now, there is little doubt that Mindtree will emerge as a strong long-term survivor post the couple of quarters of tumult or uncertainty. However, the valuation is definitely not as cheap, as it trades at a multiple similar to large cap peer like Infosys. While we do not expect any significant multiple compression because of the liquidity support to the market, with global quantitative easing and also the strong up cycle for technology sector as a whole, we do feel that a broad market correction could definitely impact the stock in the near term, and therefore we recommend all the investors to gradually accumulate the stock, taking advantage of every market decline on the stock.